from New York. This is Brett Johnson with OneMedRadio. Today we are with Michael Moe, founder and CEO of Global Silicon Valley Capital, listed on the NASDAQ as GSVC. The company came public in May, raising $50 million in an offering led by Ladenburg Thalmann and Lazard, for the purpose of investing in venture-backed growth companies, enabling average investors the opportunities to participate in companies like Facebook, LinkedIn, Zynga, Groupon, and some of the other exciting stories that only institutions have been able to participate in. Michael, thanks for joining us. Can you tell us a little of your vision for GSVC?
Thanks, Brett. The vision we have for Global Silicon Valley Capital is to have a publicly traded liquid security that invests in the fastest growing, most dynamic VC-backed private companies in the world. And so to what you alluded to before is that for the average investor, while you see this explosive growth taking place in the innovation economy, that's not an area that most people have access to. So we're effectively creating an access vehicle that lets investors participate in this dynamic growth.
So have companies like this, is this sort of a new type of investment vehicle?
It is. It's through a structure called a BDC, Business Development Corp. And really BDCs are generally used for a debt lending type of security. And what we said is we kind of reconceptualized this and said, why can't we use that structure to invest in a capital appreciation strategy? And again, because the changes that have gone on in the capital markets over the past decade and the fact that companies are waiting to go public much longer, if not forever, the ability to invest, in these emerging growth companies has been very constrained. And so that's the key part that we saw an opportunity to create a publicly traded security around that problem. And this is really the first investment vehicle of its type.
Interesting. So why do you think this will be successful? I mean, what's going to make this work?
Well, a number of things need to happen for this to be successful. First and foremost is that we have to have a great way to prioritize and analyze private companies, which is not that's a tricky business. As a side, we have a research business that focuses exclusively on private companies and innovation, so that helps. But having just an understanding of who are the most important private companies. Secondly, having a discipline and ability to quantify what these companies are worth, and have a strategy that both creates diversification, but at the same time allows the most significant successes to have dramatic impact on the portfolio. So I think it's a combination of company selection, valuation criteria, and portfolio management, which will be the key ingredients for making this a success.
So now you talk about Global Silicon Valley. You are located in the Palo Alto area, I understand, and I believe that's been one of the things you think is going to be, give you sort of the ability to find these companies?
Well, yeah, we call it Global Silicon Valley for a reason. We are physically located in the heart of Silicon Valley, which puts us sort of at the epicenter of where much of the venture capital activity goes on, where many of the important new innovative companies are being formed. And so being in this community and having that as part of your network is critical. But increasingly, I believe while Silicon Valley physically is the epicenter, this whole global Silicon Valley is becoming a mindset. So it goes really from Silicon Valley to Boston to Austin to Chicago to Sao Paulo to Shanghai to Mumbai to Dubai. I mean, that's really how we look at this kind of landscape of innovation. But having been physically located sort of in the heart of it all with that network, I think gives us tremendous advantages, both in terms of access to companies to invest in as well as knowledge. So our first investment that we announced is in a company called Know, K-N-O, at kno.com. And just as sort of an example of the things that we're able to do, that investment was made alongside in the same round and same terms with Andreessen Horowitz, with Mark Andreessen, who's arguably the hottest venture capitalist in Silicon Valley right now. The Facebook, Mark was obviously the founder of Netscape. He's on the board and investor in Facebook. Skype, he was a major investor and on the board of eBay and Hewlett Packard. So, having invest alongside of Mark Andreessen and along with that, Intel and Goldman Sachs, I think it's sort of evidence of the type of access that we'll be able to get in terms of these important companies. And if we weren't physically located here, I think that'd be more challenging.
So how do you get access? I mean, doesn't everyone want to invest along with these guys?
For sure. I mean, the old saying is, Kleiner Perkins, the only thing more difficult than getting Kleiner Perkins to give you money is to give Kleiner Perkins money, right? So, I mean, the top venture capitalists, have more people that are trying to partner with them than there's time of the day. So, some of the key things that we bring to the table, one, our relationships that go many, many years, where people know me, know us, know what kind of value we can bring, know how we'll play in the sandbox, and so forth. And a key part of what we bring is we don't need to be on a board. That's not our limit. We don't have limited partners that require that as part of one of the things that we need to do invest. And so we're a pretty good partner to bring in that. And I guess besides just primary capital that we can provide, we're also a resource or a source to buy shares of secondary stock.
So you talk a lot. Maybe it's a good time for our listeners to hear a little bit of your background. I know you were a highly regarded analyst on Wall Street at a number of firms. I know it was Lehman Brothers and Merrill Lynch, and then you went out and started Think Equity. Can you tell us a little bit about your background in the investment business?
Well, Brett, you just hit on many of the highlights, but I've been involved with growth companies for nearly the past 25 years. As a research analyst, I was the head of the growth research at Lehman Brothers, and then I was head of growth research and strategy at Montgomery Securities, which was a very successful San Francisco firm. And then I was head of global growth research at Merrill Lynch before starting Think Equity Partners in 2001. And we grew Think Equity, which was a growth-focused investment bank. We grew it from idea to 200 people and $70 million in revenue, and sold it in 2007. And so really since that time, what I've been focused on are these structural changes that have taken place in capital markets, how growth investors and growth companies need to reconceptualize this ecosystem. And, this fund that we've created, publicly traded fund, really is a way to kind of bridge this idea that growth companies need access to different type of investors, and investors are looking for ways to access the most dynamic emerging growth companies in the world.
Mm-hmm. So I know you had also written a book called Finding the Next Starbucks that I think had gotten a pretty good success, and as I understand it, had been published in 5 different languages or multiple printings. And I guess within that you describe your investment philosophy. Can you kind of give our listeners a little sense about what you do or what the process is, and a little bit about the book that you wrote?
Sure. So Find the Next Starbucks really was my investment philosophy put into words, and it's focused on how do you identify and invest in what I call the stars of tomorrow today. So the first part of that is we have a disciplined way of how we think about where growth companies are going to be found. And so we think about what are the important growth sectors of the economy, technology and healthcare, media, education, and then we think what are the mega trends that are impacting these growth sectors? So globalization, the internet, outsourcing, demographics, convergence, consolidation, freemium models, open source, and sustainability. So when we think about how those cross-sect to create powerful investment themes, and that's where we allocate our attention, and that's where we're looking to find the important next stars of tomorrow. And then when we create these investment themes, and so social media, for example, is an investment theme today. Mobile computing and application, the digital doctor, social learning. Those are themes that we like. Then when we're actually looking at the specific company, we have a formula I call the 4 Ps that are the common denominator of of every great growth business that we'll invest in. The first P being people. No shortage of interesting ideas, but it's always the people that make the difference and who their partners are and what their culture is. So the first P, if we don't get beyond that, we won't look at the other three Ps. But the other three Ps, secondly, we're looking for companies that have a leading product, so a company that leads its industry, proprietary product, one-of-a-kind business. Again, looking for companies that not only survive but thrive during their corporate evolution, not interested in the Me Too's or the number 3 or 4s that might be cheaper from a valuation standpoint. We really believe that it's about leadership. The Internet's all about disproportionate gain to a leader within a category, so we want to focus on who's going to be the number one player. Third P is potential. How big can the company become? What are the mega trends at the back of this opportunity? What are the investment themes? How big a market is it? And the fourth P is predictability. How visible is that growth? What kind of operating leverage does it get as it scales? Many of these companies don't have a predictable model developed yet, but you look at the characteristics of the business and the people and what they're doing, and you start to see what these signposts on the highway are going to be, and that you can quantify what you think the value can be 2, 3, 4, 5 years down the road. That's really the essence of what we talk about in the book, and what our investment philosophy, both with the fund and then what we've been doing before that.
So in terms of the operations now, you are looking for deals, you're seeing deals, you're evaluating deals. What sort of kind of flow are you getting now, and what's sort of the process, and how many investments do you hope to make and expect to make?
So our fund, we raised $50 million initially, as you mentioned in May. We anticipated making approximately 15 investments from that initial $50 million, and expect the typical size will range from a couple million to $5 million. But we can go smaller than that if it's a unique situation. We can go larger than that if again we feel compelled. We're seeing enormous flow and opportunity. So, while we've only announced one investment, we'd also announced with that investment that we have a handful of investments that we have made and are in the process of closing. So we anticipate that over the next month that we'll be able to discuss these in more detail. And so in terms of flow, because we've been so focused on looking at prioritizing really the best private companies in the world and being very active, in terms of our dialogue, and I happen to be on the board of Shares Post, which is one of the key private marketplaces alongside with Second Market. We really have seen tremendous amount of flow and opportunity, and our fund is unique enough, and I think our strategy is unique enough that people have sought us out with really unique, interesting opportunities.
Can you talk a little bit about your first investment? What was special about that?
Yeah, I mentioned before, the characteristics of, or the other partners that we have investing in the company know, but kind of using this whole 4P formula. First of all, what No does is digitizing textbooks, and so this whole digital revolution that has already transformed the music industry and transformed the newspaper industry and magazine industry and the traditional book industry is now just coming into the textbook market, which is a $10 billion market. So looking at the 4 Ps, the first P, people, No is founded by Osman Rashad, who formerly founded Chegg, which has been a very successful book rental company, kind of like a Netflix for textbooks. He's put along with him premier investors, as I said, like Mark Andreessen and Intel and Goldman, and a real stellar management team. Second P, product. No is leading this digital textbook area. They've got over 80,000 textbooks that they've already digitized with all the major publishers. They've just launched or announced their first iPad app. They will have be on multiple platforms in the coming months. The third P, potential. Obviously, this tailwind of digitization and the digital revolution, and the fact that you've got $10 billion spent already on textbooks that is going to go through radical transformation with No as a leader. And the fourth P, predictability. There's elements to this business model, including the fact that it has subscription-based, as well as other revenue legs that will create, greater visibility than a normal high-growth company. And so you put it all in the mix, and it fits very, very well, perfectly, kind of with what we're trying to articulate to investors that we're able to do. Get access to the highest quality, fastest growing, most dynamic, biggest potential companies in the private company marketplace. And so that's, I think, a good example. And as I said, the other companies that we'll be able to discuss, in the next month or so, have a similar, kind of characteristics behind it.
What's been the response to the market for your stock, and also what's sort of your outlook on valuing your stock? Because obviously you're making investments in illiquid securities typically that don't release earnings results. Can you talk a little bit about those two issues?
Yeah, I mean the stock price, and first how people received it. It was a small offering, a $50 million offering. Lazard and Ladenburg were our underwriters, and I think the reality is the stock isn't well known at all right now. I mean, when people hear about what we're doing, they're sort of like aha. But generally speaking, it really hasn't. People just don't know that much about our strategy, what we've done, and what we're doing. So the stock has languished, since we went public. I mean, again, I think not because anything's happened. I mean, basically, it's cash was in the fund. We've made investments, but people don't even know what those investments are. But so we went public at 15. The stock is trading at 11 and change today. That represents, and again, I don't think somebody should buy this or sell this based on this, but that represents a pretty significant discount in the net asset value, of the fund. So that's one way just to look at it. I think ultimately the stock will be valued by the value creation that goes on within the portfolio. And so, your point about, it's difficult how you value these private businesses. So, one element of success is understanding who are great, what are fundamentally great companies. And the second element is making sure you're paying a price that creates both, some type of margin of safety and ability to create return that will ultimately be reflected, in the share price. And so, our expectation is that, we'll undoubtedly make some mistakes, but what we aspire to do is to, if we in fact are investing in the leading private companies in the world at a price that's a fair price, the shareholders are going to be well rewarded for participating in our stock, at these levels and candidly higher levels.
Right. So the opportunity for investors now is you can actually buy in at a business that's trading below its book value, below the cash it's got in the bank, at a time when it's beginning to make some sounds like some good investments. No being one, and a number of others in the queue, and largely capitalize on the fact that the story is really pretty much unknown.
Yeah, I mean, I think that the biggest. There's two things. I think the strategy that we have is unique and yet I think compelling. And you couple that with the fact that today very few people know about us. So I think as our story gets better known, as well as our portfolio starts to evolve and people see what's in it and so forth, my expectation would be that would be reflected in the share price. And so, yeah, I think today, we're very, we're very excited about how we're positioned, and we think investors should take a good hard look at what we're doing and where we're going, because I think they'll be happy that they do.
Well, it sounds like an exciting story, Michael. Thanks so much for joining us. Again, that's Silicon.
Very much appreciate it.
You bet. Again, that's Global Silicon Valley Capital, listed on the NASDAQ as GSVC, Palo Alto-based investment company focusing on the promising growth companies